This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the simple support line that I've been using. This is the daily chart, and again, this is the simple support line that I've been using for the past, I would say now, 6 or 7 reports. And we can see that prices did break beneath it. There was a retest of that line from the opposite side, and now prices are selling off. I mentioned yesterday how we might look to take a little profits because we did have, I would consider these two doji candles here, but that analysis was canceled out by the close beneath the low of this doji candle right here. So right now I would maintain that bearish bias. If you still have a position off the test of this upper resistance line, I would continue to hold the position, and if you did exit the position, I would right now be flat the currency pair, possibly looking for previous support to act as future resistance, and that would be at the low of this doji candle right here, and also this, you can call this a hammer candle also, and that price level is just above the 89.50 area. So that's a price level that we can look for over the next 24 to 48 hours as a possible area of resistance. Again, 89.50 area. The next chart is the Aussie Kiwi, and not much has changed here, continuing the bounce off that 38.2 fib level. If we zoom out here, you can see the full extent of the fibs, and if we zoom in a little bit, we can see the prices right now near that 124 figure. Again, I would look to take at least a portion of profits near the 124 figure and continue to hold the rest if you're in the position. And moving forward now, we can also add a simple support line to the pair from the lowest low on the chart, which is the October low, and connecting to the most recent low of the test of the 38.2, and right now that support level comes to around the 122 area. So that's also what we can look for over the next 24 to 48 hours, because if you don't have any position at this time, I would not recommend entering at this price level. We might wait for prices to come down to a clear support line, the one that I just added to the chart. The next chart is the Pound Swiss, and not much has changed here. I like this trade right here. I like this short trade with a stop in the 70-70 area to the 70-90 area. Again, this is a borderline head and shoulder pattern on the daily chart, so this is something we can look for, and the target for that trade would be the lower support line here, the simple support line, and again, we can use that as a target for the trade. The next chart is the Euro Swiss, and not much has changed here either. And this is a daily chart once again. If I zoom out, this is the longer term resistance line that I've been using for the past, I would say, 10 or 12 reports now. And then we do have a bull flag pattern forming. We have a breakout above the bull flag, and now prices are finding support on the previous resistance line of that bull flag, and again now is acting as support. I'm expecting this pair to break out of that bullish flag formation and test the longer term resistance line. However, with this line, it's sort of steep, downward sloping. Doesn't look too steep now as I've zoomed in, but if I zoom out, you can see that it does become rather steep. If you give me one moment here, and that means that trying to find entries along this line, while that's what I would suggest, is a little difficult because this line will drop about, I'd say about 30 pips each day, so that's adding on to your risk. However, tentatively, we can use this line as a support line moving forward, and again, looking for the prices to test that longer-term resistance line on the daily chart. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.